Hey everyone, the recent volatility in the stock market has been some of the most volatility that I have experienced ever since I started investing years ago. Now, I have to say that I empathize with any new investors out there who are just getting started into the stock market because it's very difficult to navigate the market volatility if you are a new investor who has not experienced this level of volatility. So that's the reason why I'm making this video. I want to provide a framework that is going to help you navigate through these interesting times and not get burned or discouraged in investing in the stock market. Now, this video is not going to make you an investing genius in one video, but what it will do is get you on the right track to investing well during in volatile times. In this video, I'm going to explain what exactly a stock is, show you step by step how to buy a stock, and share with you 5 tips that Warren Buffett and other great investors use to have long term gains even through turbulent times. So, to answer the question, what is a stock? I pulled the exact definition that Investopedia uses to provide a clear definition. So, a stock or equity is a security that represents ownership of a fraction of a corporation. This entitles the owner of the stock to a proportion of the corporation's assets and profits equal to how much stock they own. Also, units of stock are called shares. This image shows a visual representation of what a stock is, a piece or portion of a company. In other words, if you own stock in a company, you are a shareholder of that company. So you share in the company's assets and profits equal to how much stock you own. Stocks are bought and sold predominantly on stock exchanges, though there can be private sales as well, and are the foundation of many individual investors' portfolios. These transactions have to conform to government regulations which are meant to protect investors from fraudulent practices. Historically, they have outperformed most other investments over the long run. These investments can be purchased from most online stock brokers. Stock investment differs greatly from real estate investment. Now, another common question in relation to stocks is what is market capitalization, or market cap for short? Well, the market cap of a company refers to the total dollar market value of a company's outstanding shares of stock. It is calculated by multiplying the total number of a company's outstanding shares by the current market price of one share. As an example, a company with 10 million shares selling for $100 each would have a market cap of $1 billion. The investment community uses this figure to determine a company's size, as opposed to using sales or total asset figures. In an acquisition, the market cap is used to determine whether a takeover candidate represents a good value or not to the acquirer. Using an actual company like Apple as an example, the current stock price is $127.55 as of the current after hours price of the recording of this video. This equates to a market cap of $2.125 trillion for Apple. Also, Apple currently has over 16 billion shares outstanding, meaning shares still in the market, not bought by anyone. Now, you may be wondering, why do companies issue stock in the first place rather than keeping all the stock to themselves? Well, stocks are issued by companies to raise capital, paid up or share, in order to grow the business or undertake new projects. There are important distinctions between whether somebody buys shares directly from the company when it issues them in the primary market or from another shareholder on the secondary market. When the corporation issues shares, it does so in return for money. Okay, so let's say you want to put some of your money in stocks. Well, where do you even start? First, you want to sign up for a brokerage account on an investing platform. An investing platform will allow you to buy, sell, and hold stocks. The most popular ones include newer mobile-first platforms such as Webull, Robinhood, and the Cash App, as well as more established platforms such as Fidelity, Charles Schwab, and JP Morgan. One of the platforms that I use is Webull, and that's what we're going to be talking about today. With Webull, you get access to great stock analysis and charting tools. Right now, you can get 2 free stocks valued up to $1,850 when you use my Webull link down below and deposit $100 in your Webull account. Now, let me take you into my app dashboard. So here we see my dashboard. So first, we would need to deposit some money into our account. Once the deposit is complete, we would go search for a particular company that we're interested in investing in. I went ahead and searched for Apple using their ticker symbol or unique stock ID, which is AAPL. We can search for either Apple or AAPL, and both would work. In the top middle of the screen, we can see the volume tick by tick and volume analysis. On the right, we see a chart of Apple's stock price, and on the bottom middle, we see an option to buy and sell Apple stock. Now, zooming in and focusing on just this part of the dashboard, we see various options, one of which is order type. An order type essentially defines the rules in which a buy or sell order is executed. I normally use limit orders since I can set a limit price, which is a particular price that I want to purchase a stock for, to have some control on my buying price. We see an option to enter the quantity of shares that we want to buy, which in this case is just one share. As I mentioned before, we can set the limit price, which I set to $127.50. There's an option to set the time in force that this order is active. We have the option to set it to just for the day, or GTC, which stands for good till canceled, meaning the order stays active until we cancel the order. We also have an option to have the order be active during extended trading hours. We also see some more advanced options, such as setting a stop loss or take profit order. Once we click place order, our order is set and we're good to go and wait until the price drops to our limit price and our order is executed. Now, one way to start investing that actually costs no money at all is to destroy the like button for the YouTube algorithm. For the low price of $0, you can help get this video pushed out to other people looking to start investing by turning the like button blue. So thank you for doing that. And with that said, let's get back into the video. Now I'll share with you 5 tips that Warren Buffett and other great investors use to have long-term gains even through turbulent times. As mentioned before, these tips will provide a framework to help you navigate through these interesting times and not get burned or discouraged in investing in the stock market. So, tip number 1 is to get your emotions in check and be ready for a market correction or crash. One of the things that is going to be separating the average investors from the quality investors during these times is those who can handle emotions. Jordan Peterson advises that we be the reliable one at a relative's funeral. It's important that we take that advice further and relate it to investing, particularly investing in and after a market crash. You see, this is the mindset that 90% of investors take on. When they see their stocks go up, they feel very happy. They go tell their friends when hanging out how much money they made. They check their stocks weekly, if not daily. Their emotions are all caught up in the ups and downs of the stock market. However, the small percent of investors that do the best are the ones who do the opposite of what their friends do. The investors that win are actually when their stock goes down because it means it's gotten cheaper, so they can buy more shares at a cheap price and better value. Over the long term, they know the cheaper price that they buy into stocks, the higher their returns will be. It's because of this exact concept that Buffett says be fearful when others are greedy, be greedy when others are fearful. In essence, buy low and sell high. Unfortunately, most investors do the opposite. So, tip number 2 is to choose an area that you are competent in. If you want an advantage over other investors, if you want to be getting those high level returns, you need to be investing in areas that you know well. So, what I recommend you do is to take a step back and assess the areas that you know well. Okay, now if you're a young person, it might be gaming, artificial intelligence, social media, or in general, some type of technology business. If you're older, your advantage might be in businesses that are more mature, such as hospitality, travel, wine, food, etc. Warren Buffett only sticks to these more mature business models that he knows well, the likes of See's Candy, which sells sweet confectionery products. That business model has been around for ages and Buffett understands it, or the likes of insurance, such as Geico, which Buffett put many hours into getting his head around. He knows that game so well that he can pick the companies that are good investments. And you should be doing the exact same thing as Buffett. As I say, if you're young and you like gaming, well, you probably have a better idea than most of what companies are going to lead in the future and what companies will and industries will take off. That's why one of Peter Lynch's most famous quotes is so simple yet so genius. He says, know what you own and know why you own it. Most investors want to make money in every industry. They want to talk while hanging out with their friends about all the companies they own. But rarely do they stick alone to the industries they know well. Rarely do they understand exactly what they own and why they own it. That's why you shouldn't be like most investors. So, tip number three is to learn the fundamentals of stock investing first to better understand the stock market. It's good to know key concepts such as PE ratio, return on equity, EBITDA, the various types of stock market orders that was shown in my Webull demo, and different styles of investing, including Warren Buffett's style of investing, which is value investing, or buying a company stock below its intrinsic value, or another style, which is the dividend aristocrat strategy. Now, another key concept to know and apply is to smash the subscribe button and bell icon to get notified when my videos get uploaded. It's completely free to subscribe and hit the bell, and each subscribe and bell you click directly helps each video get watched more. So thank you for doing that. And with that said, let's get back into the video. So tip number four is to ignore the minutiae of the market. In other words, ignore the daily price fluctuations in the stock market and ignore the daily news. Also, don't think of day trading or short term trading, whether that's one day, 1 week, 1 month, etc., especially when you're just starting out in investing. Only focus on your high conviction stocks and remember why you bought certain stocks in the first place. To use another Warren Buffett quote, only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. Finally, tip number five is to know the market cycles. In general, it's important to know which part of the market cycle we're currently in so you can make better informed investment decisions. This image shows the relationship between the stock market cycle and business cycle. At the bottom, it shows the relationship between the yield curve gap and the stock market. As the quote there says, you can buy the strongest stock in the world, but if it's in a weak sector, you can still lose. So, a great way to get started with investing and apply these tips is to get two free stocks valued up to $1,850 when you use my block or Webull link down below and deposit $100 in your Webull account. Also, if you're interested in buying Bitcoin and earning interest on your crypto, sign up using my BlockFi link down below, and you'll get up to $250 as a crypto bonus, depending on how much money you initially deposit into your account. So I hope you got a lot of value and learned about the what a stock is and how to invest in stocks. If you found this video helpful, be sure to hit the like button, subscribe for more investing and personal finance content, and hit the bell to get notified when my videos get uploaded. Also, comment down below anything else you want to see and learn. And follow me on my socials to get even more investing and personal finance content. With that said, thanks for watching. Take care.